Saturday, April 12th, 3:04 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. I'm going to go over the S&P 500 sectors. The sectors will be weighted average, meaning I'll go over the top to bottom, the first ones that represent the largest percentage of the S&P 500. And if you don't know, the S&P 500 stock index is the major stock index institutions and individual investors use to compare their investment portfolio with their stocks. So 11 sectors in the S&P 500, they're stock ETFs. You could invest in either one of them. So if you don't want to do the S&P 500, you could do the individual sectors. And on the left is a watch list of these sectors. And that's how it closed Friday. They all closed green. There's a lot more to know than just that. That simply just tells you they closed higher from what they opened at. Also want to look at market cycle. There's cycles in the market. So here, we're going to look at 5 years of history. Each candle represents a week. Market cycles. You have a markup phase. You have a distribution phase, markdown phase, accumulation phase. I have them labeled in white letters. So on the top far right, this stock sector is the technology one. I have it spelled out here, also in the symbols, parentheses, XOK. This year made the all-time high, 2005. Since then, this week, we made a new low for the year. We're also trending down, lower highs, lower lows. Broke into a key support level. The past, over 2 years, we were in a markup phase. Smart money was buying. Outstanding. Then, the end of last year, after the election, to the beginning of this year, we were in distribution phase. Smart money was selling. And now we're in a markdown phase. So I posted the video yesterday of the stock indexes. So you can see the major stock indexes, where the leadership is. Now we're looking at healthcare sector. See this on the far left? That was a markup phase, consolidation for the past several years, consolidation, accumulation. We had markup phase for the last 2 years, and then the high markdown. We never took out the high of last year. Nope. Where technology, I showed you, made a new high. We took out the high last year. But this one did not. No surprise. Different administrations have different biases. And this one also, just like technology, new low for the year. Financials. This blue zone on the bottom, that's a gap that has not got filled yet. I'm going to extend it out too. There we go. Hasn't been tested nor filled yet. All the way back there. So again, over the past 2 years, there was a markup phase. Smart money was buying. And then we have distribution. This year, we did make a new high. And then we made a new low this year already. Financials. Consumer discretionary. Again, look at these past 2 years from the bottom of 2023. The yellow horizontal line, we were in a markup phase. And the end of last year, beginning this year, distribution, markdown phase. Again, after the elections of last year, institutions that manage other people's money, again, had an opinion what the bias was of the new administration, and they were rotating out of certain sectors, which again, on the higher time frame, which I'm showing you here weekly, you can also see it much clearer than you could on the intraday. More data here. Okay, communication services. Yep, since the bottom of 2022, which was accumulation, Look at this markup phase, huge bullish move. And then this year, distribution. This week, new low for the year. Industrial. Yep. Over 2 years ago here was accumulation phase, markup phase. Last year was the all-time high. Look, here's this year's high. And this year, this week, new low for the year. So I think I'll move these over. Here we go. Consumer staples. Again, past 2 years was the markup phase, distribution since last year. Now, last year's high wasn't tested yet. So it's even weaker than some of the other sectors I showed you. And again, this week made a new low for the year. Just some of these, some house maintenance. Energy. We have a gap here. You see that blue? Then we have that accumulation here. Distribution last year. Again, this year, we did not take out the high of last year. You see the high was last year, 224. This week, notice what happened this week? We broke below the low of 2023. And we also made a new low this year. Very close to getting inside this gap. And utilities. Last year was the all-time high. This week, new low for the year. Real estate. See this yellow line all the way on the top left? That was the high of 2021. And this year, well, made a new low for the year here. Actually, let me label the high this year. Very far from it. Oops. This would be the high this year. So this week, this is a bullish pin bar, this green candle. Bullish pin bar. Yep, broke that key level. Maybe we'll get a retracement of this big impulse move down. And basic materials. Well, last year was the high, all-time high, so we didn't test that. What happened is this week we made a new low for the year, and we also broke the low of last year. So you already see several of these sectors not only made new lows for the year, broke prior year's lows. Very disturbing. Yep, less confidence investors have in those sectors. Even more so, I showed you which ones never even broke the highs of last year, weaker sectors. Big difference when you just look at a watch list compared to these sectors. Thank you as always spending just a little time with me. That's it for the video. Thank you for watching.